All right, we are here. We are back. It is Friday. And as always, we do the financial news, the Financial Friday wrap up with my good friend, Michael Zuber. How's it going, Michael?
It's going really well, man. Real quick, before we get started on this, I failed to do something on the daily financial news. Usually do that there. I congratulate everybody doing a deal. So Lena, I'm sorry. I failed this morning. I got all distracted about the CDC eviction moratorium and I forgot to congratulate you. So Lena, congratulations on your deal. Your card is going out in the mail today. Again, congratulations, Lena.
Yeah, Lena. Love it. Love it. Love it. Great job, Lena. So
Thank you, buddy.
eviction moratorium, is this ever going to end? What do you tell us
It's
the news?
done, put to bed. The Supreme Court has come out in a 6-3 ruling and said it was unconstitutional, illegal. The CDC has never been given the authority to do what they have done. It is now dead. 44 states now will start evictions. There are 6 states, California included, that has statewide eviction moratoriums. But this is now behind us. A couple of things that you may be asking yourself. A, will now landlords feel emboldened to file, lawsuits against the states? And I think absolutely, because if you don't know, the state of California has a constitution and in it, it has contract law. So I believe lawsuits will be filed aplenty in states where, they have, taken this course of action. So that will be coming. Number 2, I get lots of questions about, hey, can Congress come back and do this or that? The answer is they could certainly try. The squad, as they're often called, will make noise. But simply said, they don't have the votes. They're frankly not even in session. So this is happening. Evictions are being filed today in 44 states. They will start processing going forward. The rule of law, contract law, the U.S. Constitution has been beaten for a year, but it's now stood up. Yes, we can be upset about the 3 judges who ruled elsewise, but that's not how it works. 6-3, it's now dead and gone. But actually it's going to create a lot of opportunity, right? It's going to be a noisy 60 days, Ty. Some tenants are going to ghost landlords. We're going to have landlords doing turns. We're going to have some landlords vacate properties and sell. We're going to have some landlords that are in financial trouble, have to sell because they need money. So it's going to be an opportunity for people that are looking to add units, maybe some seller financing. But make sure you do a couple of things. Landlords, if you have a vacant unit today, you need to be extra careful. There are going to be lots of tenants looking for places that will soon have judgments on their credit, but you won't see them because they're not filed yet. It's going to be, landlords, be careful. Make sure you qualify, make sure you get proof of payment, make sure you're, all of those things, right? This is going to be a time where there's movement. And if you're not careful, you could get a bad tenant.
So well said, Michael. So well said. It's interesting too. So I've got several evictions going right now, and even things that were excluded, prior to COVID and/or what's considered just cause, in certain marketplaces, in certain counties, certain cities, municipalities, specifically in the Bay Area, they're just very anti-eviction and not processing. And so absolutely, I think you're going to see a lot of landlords that are just saying, you know what, we're burned out, let's get out, get out. So lots of opportunity, I see it.
Yeah, lots of opportunity. Really learn seller financing. It's something I'm really happy is in the course that you're a part of. Understand the accounting, understand how to get it done. Even I talked to a lender today. I think the thing that I'm going to try to push is, come in with a loan first and then have the seller take back a 40 or 50% second. That way they get some money to get whole and then they get payments going on. So again, it's time to get creative. You don't only have to do bank loans. You can get creative.
Really smart. I love it. I love it. So let's continue with the news, financial news. PCE. Tell us what PCE is, number 1. And then number 2, what's going on? What was the report this week?
Yeah, so PCE stands for personal consumption expenditures. It's basically what consumers, us, spend. And most importantly, it is the favorite metric for the Fed, right? Some of you might think it is often quoted CPI, Consumer Price Index, or PPI, Producer Price Index. No, the Fed looks at, and by the Fed, we mean Jerome Powell and his buddies, look at the PCE indicator. And It came out hot again. It came out at 3.6%, X food, X energy, with food and energy 4.2. This is crazy because it's 2 months in a row with the same number, 3.6. And the last time, Ty, we were at 3.6. It was, I want to say it was April of 1990. So 30 years ago. This is a problem. It is hot. It is hot. It is hot. And I think it's hotter. I think rent is underreported. I think food is underreported. It is going to be a problem for Jerome Powell. Inflation is real.
Inflation is real. So speaking of inflation, we talked about pre-roll. You talked about major rates rising for foreign investors, and then also tapering. Maybe if you can break those two down.
Yeah, one of the things about rates is we're obviously operating in a worldwide economy. The dollar is the king, if you will. It is the reserve currency of the world. It is often looked at as that thing. It's the safest asset when people are scared. The world and the world economy is starting to open back up. Yes, the media is trying to hammer us with Delta this and Delta that, but the world is getting better, even though some days it doesn't feel that way. To that end, South Korea, the first major economy to actually raise rates. South Korea took their rates from 0.5 to 0.75. Again, not great, but what is going to happen is major economies raise rates. People are going to exit the dollar and go to these other currencies because they can get a higher return. It will not start as it won't be a bad rush, but these are just the starts. Somebody has to be first. And South Korea is first. And again, South Korea is calling for another rate rise this year and 2 more next year. So while, 0.75 basis points may not be interesting, 1.5 might be interesting. And again, it's something the Fed is going to have to look at. And on that end, Jerome Powell is having his meeting this week. It was supposed to be in Wyoming, but now it's virtual. He is coming out pretty loudly, pretty dovish, right? There's dovish and there's hawkish, right? There are certain Fed members that are hawkish. Jerome Powell is not one. He's almost an ultra dove at this point. So he's now admitted that tapering will start this year, where other Fed presidents are saying it should finish this year. And then other Fed presidents are saying we should raise rates next year. And Powell's coming out saying, no, we're not going to raise rates next year. Long way off. And you probably saw you did see the 10-year if you were looking fall based on Powell's comments. So Powell is being ultra dovish, and I guess he has no other option, frankly. I believe rates are negative today. And what do I mean by that? I believe inflation's at 4 or 5%, and I believe rates are at 2 or 3%. So when you do the math, that's a negative rate. So I'm actually going out and getting debt on free and clear assets because, I believe at this point, it's basically even for me, meaning I can borrow at 5 and rates are at 5, and I will look to deploy that later. So I put my money where my mouth is, and I think inflation is a big problem.
Yeah, I completely agree. You can see inflation. It's I have a friend who's doing a commercial CCIM, high level real estate brokerage, where elite commercial brokers get together, and consensus, all of the gentlemen and ladies and gentlemen with gray hair in the room talked about 8 to 12%, average 10% inflation for this year. That
would be it's definitely possible. Just so we know, inflation it crushes the people at the bottom of the food chain, right? If you're living paycheck to paycheck in food and gas and all of that's your major expenses and rent, it hurts those people the most. I mean, it hurts.
It hurts for sure. So let's talk about earnings. I know there was a disappointment with earnings with Peloton. And then I think you had a great explanation, and I think we're going to see that probably with other companies as well. Let's talk about that.
Yeah, I think there's a couple of earnings. There's really 3 earnings stories. Again, I do a daily financial news, so every day, 7 days a week for more than 2 years now. And the theme, there's been 3 themes the last week. First theme is mall retailers like Express, Gap, things like that, clothing. They have generally reported great earnings, meaning beat top revenue, beat bottom earnings, and had positive surprises for same store sales. What that means is we are getting out of the house. We are stopped buying from Amazon and Etsy and eBay, and we're stopped getting cardboard boxes. We are going to the mall. So that's the first one, right? We are going mall shopping. We are fed up of being home.
Yep.
Number 2, we have seen inflation rear its ugly head and really crush companies like the dollar store, Dollar General. You know, if your whole business model is selling things at $1 and inflation is raging, and oh, by the way, it now costs $40,000 to ship a container from China when it used to cost $6,000. Inflation is crushing you. And Dollar General and Dollar Tree and others like them, big lots today. Oh my God, horrible earnings. So again, you are seeing inflation really eat at the bottom end of the market. And then finally, where Peloton comes in is, folks, we had some companies that had the perfect storm last year. I think Peloton is an excellent example. Last year, gyms were closed. We were told to work from home. So a lot of people in the K-shaped recovery, we've been talking about it for 18 months, the people that never lost their job, stopped spending at the gym, went out and bought a Peloton. And they bought ahead. And now, you know, they basically pulled forward a year or two of demand, and they're going to have a really tough compare. So Peloton reported horrible earnings, missed top, missed bottom, lowered price points, low renewal rates, just an atrocious quarter. But in fact, it was predictable. So there's probably a lot of companies that kind of are suffering from that. So again, when you do a daily news show, you kind of see these trends in general. So we're going to the mall, retail. Inflation is crushing people that have price points like dollar stores. And then there will be lots of companies like Peloton that they had the perfect storm last year, which means, you know, the opposite's true this year.
Yeah, interesting times for sure. And that takes us to our last category here. And I want to talk about this, something we talked about pre-roll, right? So there's a lot going on in Afghanistan. There's a lot, you know, going on with the president and decisions and influence. We've had all this inflation, COVID, the Delta, all of that. And we talked about turbulent times or turmoil. And, you know, you and I just turned 50 last week. And so for me, as a kid, I remember the 1970s.
Yeah.
I remember Jimmy Carter. I remember the whole
gas lines. Yeah.
Gas being expensive and crazy and shooting up. So, you know, somebody said the other day to me, it feels a lot like the 70s, the 1970s. And not only that, but we're also seeing real estate take off. So you had a great piece of research that we shared last week. Can we go to that and talk about, are we in the 1970s again?
Yeah, you know, I'm so glad you caught that, because I actually been saying that for the last 2 weeks after doing this 50 years of research. I'm like, I think the only question is what year in the 70s, and I'll pull it up here in a minute, right? Are we in 77, 78? Or are we in 73, 74, right? That's the question I have that I haven't answered. But dude, this feels so much like the 70s. It is pretty crazy. So let me share this. So this is the 50-year spreadsheet. I've actually taken the time to add this to my free course because so many people ask for it. So yes, all you got to do, there's a link below in my video. You can just go sign up for the free course. The video is there. So what Ty's talking about is the 1970s. And again, this is a 50-year chart. So from 1970 all the way to 2020. And oh, by the way, I also added 21 data. I've highlighted where I got my data from. So go nuts if you want to check my sources. They're all right here. I've taken highs and lows and averages and all of that. But back to your question about the 70s. Why is the 70s important? Well, the first thing we talked about is, you know, rates were basically up, right? We start the year at 8.5%, and the 30-year rate goes all the way to 13.7%. So again, today, what are we? 3%. So rates went up 5 percentage points in the 70s. So if we went from 3 to 8%, in interest rate, people think that housing would be crushed, right? That's the natural inclination, right, Ty?
Yep.
Well, look at what happened to housing. Every year was positive. It went up 7 and 4 and 2 and 11 and 7 and 16 and 16 and finally 12%. Oh, I mean, talking raw numbers, it goes from 24 grand to 55 grand, or it increases 125%.
Wow.
Not what people would think. Housing goes up 125% and rates go up, you know, 500 basis points. And that's a lot because of income. What people don't realize is incomes were also going up in the 70s. And I guess they'll be going up in the 20s as well. Incomes were up 3 and 7 and 8 and 6 and 5. And you know, again, I've been telling you, the biggest problem that we have and what Powell's missing is wage inflation. Wage inflation is going up. And, you know, lots of people talk about the lower end of the market, but that's where it starts. Wage inflation means that you can pay more for housing. And that's That's what's happening right now. So yeah, this 50-year chart is amazing. So the question I had earlier, right? Are we in 73, 74, the start of this cycle? Or are we 76, 77 or 77, 78 near the end? Because it definitely feels like it. It feels like Jimmy Carter. I brought that up, I think, on Monday. I want to go buy some books about Jimmy Carter because it feels like, it feels like we have Jimmy Carter, a one-term president who's making interesting choices. And yeah, it just feels that way to me. And again, a lot of people that watch this were born in the 80s and 90s. They've heard about the 70s. They didn't experience it. Both you and I were born in the early 70s. And I remember vaguely waiting in a car and my dad pushing the car to get gas, right? Because it was based on your license plate and, things of that nature. It was crazy times.
Crazy times for sure. It's interesting too, because, real estate must have been a part of my destiny, because as a kid, as a young child, I can remember my family arguing and my mom basically saying, hey, we need to buy a house. And, a lot of turmoil about it, but also remembering seeing an uncle who became very wealthy. He lived in Milpitas and he was retired law enforcement. And he, during the 70s, was buying houses, buying apartment buildings, small apartment buildings, doing it. I wasn't really close to him and we didn't spend a lot of time with him, but I remember my mom being so like, hey, we need to be in this. We need to be in the game. And I can remember buying, us finally buying a property in the 80s. And of course, doing incredibly well, with that property. And I felt like I was involved in that transaction. So it's just such an interesting time. 1970s would be considered a time of uncertainty, but those who were in the game and were buying obviously did incredibly well. Would you agree, Michael?
Oh yeah, no question. Again, there's always an opportunity in real estate. You just got to know where it is. It's, you got to check yourself, because I always believed that rising interest rates would crush housing. Not true. We saw rates go up 800 basis points from bottom to trough or bottom to peak, and it didn't hurt housing. Actually, Ty, I'm going to spring this on you. I'm going to stop sharing here, and I want to do a survey with you. I want to ask you 6 questions. Okay.
Let's do it.
So let me stop this. And now let me bring this up here. So I want everybody to watch this. Get out a piece of paper. Oops. Am I sharing? Okay. We're sharing. You see this now, right?
Yep. Let's have some fun.
So I want everybody to take a piece of paper, because we are going to have Ty answer 8 questions. I think it is. Mike, yes, 8 questions. Okay. You ready, Ty?
Yes, sir.
So these are predictions. I call it a guessing game.
Yep.
All right. So we'll just go to the first one. So housing inventory. And this guessing game is all about August 2022, 12 months from now. Okay. Not about next month, not about January, summer of next year. You ready?
Yep.
So housing inventory today is 1.32 million. So you have 3 options, Ty. Will inventory be below 2 million, between 2 and 3 million, or over 3 million? What do you think? What do you think housing is?
I'll even say months? A number. I think it's 2.5 to 2.8 million. I think it's in that middle category.
Okay.
2 to 3 million.
All right. Your answer is B. And the reason we're going to go through these is, as you write them down, it's going to help you understand where you really think the bigger picture of the market is going, right? It could help highlight an internal bias.
Interesting. And I'll just tell you, because being very active too in brokerage as a listing agent, a realtor, over the last 3 decades, I still think people are still going to be a little tight in terms of holding on, still a little fearful. I don't think that people just start migrating and just freely buying and selling. So I think it picks up, but I think it's not. I think it still stays kind of a low supply market. So
I think that's a very safe guess. All right, that's number 1. Number 2, interest rates. The 30-year interest rate as of today is 3.03. This is, again, Owner Rock Best Credit A paper, right? It's the one that's always quoted in the media. A year from now, do you think the 30-year rate is under 4, between 4 and 5, or over 5?
Oh, this is a good one. 1 year from now, I think it's probably trending toward 5, but I think under 5. So I would go with B. And I'll even say, I think it's going to be 4.75.
I love it.
4.89, somewhere in there.
So near the high end of that. Near the high end of the range.
I don't know if my audio went out, or you still there, Michael?
Yeah, I can hear you. You can't hear me.
I hope my audio is okay. I hope I didn't lose you.
Let's see.
There we go.
Can you
There
hear
we
me?
go.
Okay.
Yep.
All right. I don't know what happened. Let's try that again. That was weird. All right. Here we are. Share. Okay. You still there?
Yes, sir.
Okay, cool. Next one. First time home buyer, right? We talked about this a couple of times. It's kind of gone dark, but now they're doing the budget reconciliation. Will there be a first time home buyer program created? You can say no, meaning it doesn't get approved, or yes, but under 15 grand, or yes, over 15 grand. What do you think? Brand new program.
I'd say yes, up to 15 grand. They have to do something right, and this would be one of the things they could actually easily get right. So,
okay.
Yeah,
So
I would say B, up to 15K.
And the reason that is important, folks, if you're kind of playing together with my guessing game here, is if this happens, you are going to create you're going to create more demand at the bottom end of the market. So realize what's going on. Okay. Capital gains. This stuff's got to be paid for somehow. There's been talk about capital gains going up to ordinary income. It's obviously going to be part of the budget reconciliation. So will capital gains go up? One answer could be no, right? It gets cut out or doesn't happen. B, it could go up, but maybe not as high as 53%. So maybe just 30%, or yes, it'll go up over 30%. What do you think?
So my answer is no between now and next year.
Okay.
Only because I don't think they're going to be able to, I think they've got so many problems to focus on. I just don't see them. I think ultimately it will happen. I just don't think it happens in the next year.
Okay. There you go. I like it. Rent increases. Rent has been on fire. It's been on fire. It's been on fire. Do you think rent continues to go up? Do we plateau, which means a no? Yes, it continues to go up, but it moderates at something under 10%. Or no, dude, we are going to have another year of double-digit rent increases.
Double-digit rent.
Wow.
Absolutely double-digit rent. And I would say, maybe not in the teens, but definitely all indicators to me say that rent naturally has to increase. Not enough supply. Low supply.
All right. The PCE inflation, which we just talked about today with inflation in food, it was 4.2%. Will it be over 2% a year from now? The answer could be no. Yes, but under 3%, or yes, but over 3%.
Yes, over 3.
Woo. Jerome Powell, you got some problems, buddy. Ouch. S&P 500, this is a stock market. Today was at 4505 when I looked at it, so I rounded it to 4,500. Will the market be over or under 4,500? That's kind of answer one. What do you want to guess?
Gosh, I have no idea because I don't pay attention.
Yeah, me neither. I'm like,
other than I pay attention to you when you talk about it. I think under, and here's why. I read a lot of stuff where people talk about a lot of cash on the sidelines from some of the big fund managers. So I think something's going to happen in the stock market. So I would say under is my guess based on how much cash is talked about being on the sidelines.
Yeah. So that was kind of my number C is, take the over under, but also are we going to have a wild swing, either wild up or a wild down, 25% move sometime in the next 12 months?
I think a wild swing down. I think we're going to see a little hiccup, some little correction, I believe is how they would describe it.
Yeah.
And then it'll get rebought, and of course it'll bounce back at some point. But
yeah, very cool. And the last one, median home price as of July was 369,000, technically 369,300. Again, I rounded it for easy math. What's going to happen 12 months from now? Will it be under 369? Between 369 and 400? This again is national average, or will it be over 400,000?
I'm going to go with B. And I think that we are going to see appreciation in some markets where the jobs are stronger. We'll definitely continue to have good appreciation. I think other markets may be just a little slower, but I would say B is the safe number. This is a national number. So I would think we're still probably trending toward 400, but just slightly under. Or 375, 389, somewhere in there a year from now.
Yeah, folks, do yourself a favor, run through this yourself, write your answers, leave comments below. We'd love to hear from you. Again, this is 100% a guessing game. We're not predicting anything. It's not financial advice. We're just taking 8 topics or 9 topics and blindly guessing. So let us know what you think. Thanks for doing that with me.
Oh, that was fun. That was a nice surprise, and that was a lot of fun, and it's thought-provoking. So As always, you can find Michael on YouTube. He's on Instagram. He's on Facebook at One Rental at a Time is his handle. Great content, some of the best content out there on YouTube, in my opinion, the best real estate content. Also, too, if you have an interest, he mentioned the free course. Get involved with the course. The actual paid course is amazing. It's how much is it? It's very inexpensive.
$299, and we just added 3 hours of Airbnb content from another expert. So always adding to it.
Always adding to it. Michael, thank you for all that you do for our community. Thanks so much.
You got it. Take care.
Have a great day.